Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So as usual we have prepared a report. Well, it seems guys that I have learned to prepare a bit more compact reports. Finally, so it is not as extended and it's not really difficult to read, and content this time I think that's really interesting. We have tried to dig a bit in the CPI numbers and pay a lot of attention to the next Fed step. Particularly speaking, if we just left behind all formal things, and if we suggest that the Fed should not be conservative and really trying to prepare markets for its own next step, I would suggest that Fed should cut the rate in July. And we have shown in the report and give you lots of reasons why it is necessary. But at the same time, we still remain trying to keep the realistic view on the current situation, understanding that it's only 2 weeks until the Fed meeting. And chances are not really significant that chances are melting that the Fed will cut the rate directly in July. Although some preparation of the minds of the investors has started. So you can see the recent statements of the Jerome Powell when he said that it seems that Fed will not wait until the inflation drops directly to the 2%. We see some statements from the other presenters. Janet Yellen said that the inflation is constantly dropped. And if this process would start slightly earlier, and we've got the CPI numbers showing deflation not this month but previous months, as probably we could count on the more aggressive steps for the Fed. We will see. I'm still not withdraw totally these chances that Fed will still cut the rate in July, and here we have really strong reasons for that. So you will read the report, and here we explain everything. Meantime, euro performance looks really great. So we have closed our week on Friday on a positive tone. If you remember, we traded Brent by the setup on hourly chart. That is done well, and market right now stands very close to its target. So this is first target that we are considering. It is agreement of the 109.33 fib level and 109.70-75. It's OP target of this ABCD pattern, and the overbought stands somewhere around it. So this will be a relatively strong level where we expect some pullback later after it will be completed. This might be, by the way, the chance for those of you who haven't taken any long position with this upper direction, just watching for upper continuation, because we suggest that probably the upper journey should not be finished right around it. But by looking at the weekly chart, you could see that market has more extended target, and right above this area it has relatively free space. We do not have any strong levels. We do not have weekly overbought around this level, so actually until 111.50 top, this will be relatively free space for market could try to pass through. So yes, here we probably will get some pullback, but later we do not exclude the chance that market should keep going higher. Other reasons why we think so is actually performance on the daily chart. We see definitely acceleration on the CD leg that is faster than AB. And this is a good sign when the market is approaching to the OP. A final conclusion that we could make from the daily chart is that until the OP target will not be completed, we should not expect really deep retracement or abandoning of this target. This could happen only by some external impact, if we will get some external driving factors, some drastic speech or solution, some solution from the big authorities, maybe geopolitical events or something. In this case, it might happen. But normally, when the market is driving on its own, it almost never abandons important targets and never shows too deep retracement when it stands very close to the target. Some intraday pullbacks are possible, but they should be relatively small. This is the core of the strategy in next week, because we will be focused on this target. On the 4-hour time frame chart, if retracement will start, we could consider two levels. 108.50, approximately 30% retracement, which will be also retesting of these previous tops, as you can see here and here, which seems logical. Next level is 108, 108.17, looks also great, but currently it seems a bit too deep for a current situation. I would consider it if OP already will be tested on a daily chart. In this case, we could speak about this level. But for now, for current situation, when the market stands just 50 pips on average from the target, retracement for the 400 pips without any target and without any barrier seems not natural. So by this reason, I would only consider on this level for now. This is for those of you who trade on relatively high time frames, daily, 4-hour time frame chart. If you still would like to take more action and you're ready to take positions near the target, because you should understand that since target stands just 30-50 pips from the current situation, from the current market, you have to place your stop somewhere closer to keep positive risk-reward ratio, right? So you can't hide it below this area. It will be too far. So, and it will give you the negative monthly expectation in this trade, which is not good. From that standpoint, I could offer you the setup that we have on the hourly chart. Take a look at our bread and butter trade on Friday has taken the shape of the butterfly. And the first target of the butterfly is done, which is a 108.10 is 127 extension. And the logic that you could follow seems relatively simple. So if you suggest that market should keep going higher with the butterfly, you could try to take position with this pattern. And the first level that you could consider stands around 108.85 as a possible retracement. Correspondingly, you do not need to hide your stop too far, because you're sticking with this actually butterfly. You could place stop just below its lows, right? So very close. This first approach. Second approach, if you expect deeper retracement to the 4-hour time frame chart targets, 108.84, or you could see it right there as well, you could try to buy right at this area. Why? Because logic is very simple. So if market fails to restart upward direction right from the first level, it starts dropping back to the next confidence support, that turn the butterfly in potential hand shoulders, right? So it might be left shoulder, head, right shoulder, suggesting ABCD retracement. Buying at this level give you insurance that on the pullback to form the right arm, you will be able to turn your trade to the break-even or even to get some money. Or you could just protect it with some break-even stop and see what will happen, because these hand shoulders in the current circumstances also could fail. Don't forget that our major point here is that market stands on the daily chart near the target, near important level. That's why, as we said, retracement should be short, very small. And from that standpoint of view, I wouldn't exclude the chance that hand shoulders could fail. Anyway, from that standpoint, buying here seems relatively safe. Besides, you will have to place your stop very close, just below this area, so it will be very small risk, somewhere around 20 pips. The same story if you were trying to buy right there. In this case, it's a bit more risky just because you will have to get a drawdown to this confluence. But at the same time, if scenario with the hand shoulder starts working, on a pullback, you will be able to out either on the break-even or even with a small profit. But at the same time, you take the position with a possible earlier upward reversal. So if market will show just minus 30% retracement and start going to the 1618 target, which is 109.24 or even higher. So that's the simple logic. But this is, guys, a bit well, not suitable to everybody. This is intraday action, and if you feel confident, if you would like to participate in this more active market performance. So you could think about the scenario that I just have described. Just take the weighted decision. So think twice about this and actually make the decision on the current situation. So yes, we also have here some divergence. I wouldn't pay too much attention to it, but still, if hand shoulder starts working, and we'll get the final action to this level, this divergence could work, but this should be considered not as a major reason for taking the position. So that's actually our trading plan for the euro currency in the beginning of the week. Let's see what we will get.